Big trouble in little China. No one knows how bad China's economy will get, but one thing's for sure, it is on the downturn. You're seeing a photo here of a Chinese housewife day trading. She's looking up at the board and she's seeing information that she doesn't like. Stocks down that she holds, and hopefully she has a plan B because there is no relief in sight when it comes to the downside, especially for the common day trader in China who shouldn't be in the market at all, especially when they have access to gold and silver over the counter in nearly every city. China's stock market sank sharply again, and it's been down day in, day out, at times 4, 5, 6% a day, more than double digits during a week's time. More than $1 trillion worth of government support measures injected into the markets to keep them up. This is as transparent as it can be to anyone that is looking from the outside, and to the people that are here in China, that basically their market valuation is false. And if they're gambling in the stock market, they're going to go away heartbroken, especially now that the Chi-Coms have been exposed for exactly what they are: manipulators of their markets and perhaps abroad. Now, injecting money into their markets has the function of basically supporting or building a base at the bottom end so that the well-heeled investors in China stay liquid and they don't lose out on their massive amount of yuan that they have to invest in stocks. These tigers basically are all associated with government-related companies and the private sector, and they have to save face. They have to keep their stock value high, if for nothing else, to project strength and project the fact that they are still in a growth period. China currency turmoil spreads to other emerging markets. We see what happened when China this past week devalued the yuan. Other nations followed suit. Take a look at India. Take a look at Turkey. Take a look at other currencies and what they did to follow suit when China devalued the yuan. This is a chain reaction. This is a currency war, like I've said all along. It's a race to the bottom, and China is now on board with that. This is in response, in my opinion, to what happened with the IMF, the decision to not include the Chinese yuan in the basket of currencies. It's tit for tat within a week of not being included in that basket, which China coveted so much. They devalued the yuan to basically save face, to strike back, and to support their export market, which is floundering. August numbers coming in for Chinese exports. Factory exports are down to its lowest point in 6, 7, 8 years in some case. This is bad, and it's going to get worse. Like I said, big trouble in little China. China's currency will plunge another 10%, Barclays says. That could be the case, but for right now it's settling right about 6.39. Another adjustment or two is probably on the way, depending on the reaction from the West. But one thing that it will do short term is it will help the Chinese exporters to regain some of the losses that they've had recently. And this currency war has yet to get a major response from the United States, as the US dollar stays very strong against other currencies abroad. Almost, you could say, artificially strong, considering the fact that the United States is the world's largest debtor nation, China being the largest creditor nation. Why on earth can you say that the Chinese yuan has been right around the 6.2, 6.3 mark for some time when it should have been 3 to 1 years ago? My thoughts exactly. The flawed argument around China's currency manipulation. This is the alternative view here to what's happening. Some of us that think this thing out will understand that it's tit for tat and that China must react to an IMF decision that they were not expecting. Others may see that it is purely a devaluing to compete with other countries with exports to boost their economy, which they claim is going to be 7% GDP growth. Although it is my belief that the Chinese GDP growth is right now is about around 3%. If they did not have the government injecting money into markets, it would be flat or in recession. And we know that if the Chinese economy goes into recession, the slaves will get restless, we have social unrest, and then 1.4 billion Chinese cannot be stopped. Apart from the currency being an issue, we look at the overall effect on Las Vegas. Yes, Las Vegas being one of the areas that is affected mostly by currency devaluation. Why, you say? Well, it is because of all of the gambling in Macau and Las Vegas. Macau being the #1 area in the world for gambling, and with turmoil in China on the economy, numbers coming in from Macau are less than encouraging. And also, the numbers in Las Vegas less than encouraging because Chinese tourists come every summer in droves to Las Vegas to gamble. Well-heeled Chinese gamblers will fly into Las Vegas and basically they'll spend a significant amount of money, enough to be felt by Las Vegas. So when we look at tourism, we're going to understand that there is going to be a huge problem in tourism. And for expats like myself and others who are working here in China, these currency moves can affect us to the hundreds and even thousands of dollars, because if an expat living abroad is earning yuan and their yuan value slips, yet they're still getting a salary pegged on a anticipation of a stronger yuan, well, you can get my drift. Basically, when they exchange that money into dollars, euros, and so on, they will get less purchasing power for their labor. Of course, with this tit and tat, basically you'll have a lot of speculation, a lot of conspiracy theories, but this one here is interesting to say the least. Warning shot from the United States: don't crash the dollar or sell our debt. Explosion in Tianjin, which was curious to myself and others because the site of the explosion and the video that was released and the word here in China is that this is not a simple chemical fire that could produce such a hole in the ground and such a flash and mushroom cloud, that they believe that it is something along the lines of next-gen weapons. Perhaps the Chinese were storing nuclear material, atomic material, or other things in the port. Or could this be a black ops operation? China devalues currency, then Pentagon strikes in mere hours. Possible, maybe not probable, but we can't leave anything to doubt. We have to consider some of the most bizarre things happening. Like I've said before, over the past couple of years, China and the United States have been at war covertly in Africa for years. There's a lot of black ops information out there that will back up that statement. And when you talk to people in Africa, contractors that are there and so on, you'll find some very interesting facts that are not being reported on the news. Space-based weapons, I can't say for sure, but we have to consider what would cause such a blast in the port of Tianjin. On a side note, China's island building enters new phase. Now, we saw that with the devaluing of the Chinese yuan, and over the past couple of weeks, the rhetoric has been that China will stop expanding their islands in the South China Sea. And they have. Yet, it doesn't mean that they're going to stop completely going forward. The dredging has stopped, in my opinion, because of the typhoon season that is occurring here right now in China. Because of the storms and the violent storms that come in and the disruption in the islands, dredging is not recommended at this time. So they've cut that building out, and perhaps will pick up in the winter months Difficult to say, but it gets very interesting when we consider geopolitics in the South China Sea and the recent developments in Chinese economy and the tit for tat with the currencies here. Chinese to build giant floating fortresses. Now we know that China does not have a navy or an air force that is yet up to par to challenge and project power throughout regions of the world. But these new manufactured floating fortresses that the Chinese have for docks and for landing and for all kinds of drilling are being manufactured and will be put out in the very near future. Now China, having these moving fortresses, they can claim that they are supporting their civilian vessels, fishing vessels that are in the South China Sea. They've done this before, and claim sovereignty in international waters and use these ships for military purposes very easily. They can be equipped, even though they do look low tech at the moment. They can build them faster and they can build them cheaper than if they went out and built huge aircraft carriers. It's a different strategy than what you might think of in the West. And you can understand how it may work when they honeycomb South China Sea and other regions with these so-called drilling and fishing and other types of vessels that can easily be used as military installations. So a lot going on in China, and big trouble in Little China to be sure. No one's sure how bad it will get, but you can be sure that good news is not on the horizon.